Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 8th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to be in a very clear melt-up phase right now. Ever since the break above the 44.21s here, we've made a quick move to the edge and then a quick move to the 50% extension here up above. We're looking for a continuation toward the 48.05 target overall. Down the road, especially by the end of the year. But given this melt-up phase, you never know if it's going to continue a little bit more, or do we build a range and then follow through at some later point. But right now, 48.05 is that upside target we're looking for. We have seen an initial move to the upside away from the FOMC key level on November 3rd. That initial rally right here, very strong. You'll likely continue to see it go up until you see a strong rejection. Once you see a strong rejection, we may return to retest that level and then bounce again. So that level right now is a target and also an opportunity to fade if we see it again. Keep in mind, we do have Fed Chair Powell speaking in about a couple of hours, 9:30 a.m. Central Time. We also have Fed Chair Powell speaking again tomorrow, 2 days back-to-back. A ton of FOMC members speaking today as well. So we have a lot of Fed speak that could increase the volatility, but overall this market remains bullish with a continuation toward 48.05 ahead. Here's a look at the NQ, also very bullish, very clear melt up phase here. Ever since it broke back above the 15K level, it's been very bullish. You've seen it take the FOMC key level on a November 3rd bid, rallied up to R3 on the composite bands there, 16.4. And again, any pullback into that zone could be an opportunity for bulls to defend and extend this thing to the upside. Right now, still seeing quite a bit of strength here overall. We are at an R3 band, which means we may be a bit over extended to the upside. Any counter pullback could still offer an opportunity to push this thing higher down the road. Right now, short term, again, Fed speak, range bound with an upward bias, failed new low here developing today, and that could open up more upside if price starts to push above 370, the previous session's midpoint. Here's a look at crude oil. Crude right now, a little bit of a pullback from the highs of the day. This pullback here pushed it through the previous session's high price right there, rallied through it, and is now right back to that point in a downtrending market. Well, at least a downward kind of slope. We're clearly in an uptrend here overall in crude, but we've turned off of that high, lower high, lower high. We've also seen failed new highs come into play, and that's kind of what's developing right now. The way that the intraday looks right now, VWAP has been taken offered, higher high failure on this high, and we're now approaching the previous close here. Through that close opens up a return to the mid, and that could even open up more weakness up ahead. So right now, this market remains mostly lower highs, lower lows, but kind of range bound after that massive rally. If there's a failure to stay above the previous session's high, 81.80, basically, that could open up some weakness. Right now, keeping an eye on this one to see how it plays out. Keep an eye on the FOMC key level, 80.82. Here's a look at gold futures. Gold right now up about 1/3%. Narrow range, 50% of average range here at the highs. This one closed above 1820 on Friday. Big time move here to the upside over the last few days from the 1760 level, our key level. Previous quarter's close as well, and price bounced the last 3 days. Now sitting up here on this fourth day with a shot to see 1835 to 1840. As we've talked about before, price continues to remain between the 1760 and 1820 zone. You get a little bit above that, you get into about 1835 to 1840. As we've seen the last 4 times, if we get into this zone, it could be an opportunity to fade it right back down to 1760. So a little bit more upside here, and if we see 1835 to 1840, watch for signs of a fade. All right, that is it for now. Actually, one more thing here with regards to gold. There is compression developing. There is clear compression. We talked about that on Friday. This right here could lead to a major breakout at some point. The last thing I'll mention about that compression is that we do have pinching of the composite yearly bands going on. So these are pinching inward, these are pinching inward, and soon they'll normalize, and that could be an indication that a breakout could be soon. All right, that is it for now. We'll see how this plays out heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.